Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Katie Talati. She's the director of research over at Arca to discuss Ethereum Classic, Ethereum, the merge, and all the other hot items going on within the crypto space. Katie, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me, Jill.
All right, let's start with Ethereum first. Ethereum Classic has been moving up. We also know that the other Ethereum has been moving as well in July. What are the difference between the two, and what are the catalysts behind them right now?
Sure. So for those of you who aren't familiar with Ethereum's history, Ethereum's been around since 2014. However, in 2016, there was a fairly high profile hack, which at the time was draining Ethereum funds that would have really been pretty catastrophic for the early and just growing Ethereum ecosystem. So the developers on Ethereum back in 2016 decided that the best way to take the funds back from the hacker was to fork the blockchain, basically create a copy of the blockchain. And by doing so, they were able to kind of like erase the hack having ever happened and return Ethereum to every holder. What happened was they assumed that the original chain that was left over from the hack would essentially die out or become a zombie chain. But it essentially gained some traction. And what happened is that it became an Ethereum Classic. People decided that they wanted to keep the immutability of the original Ethereum blockchain and that should continue in perpetuity. And then, most of the Ethereum leadership decided to continue on the other track, building Ethereum. Now, up until recently, their development updates have actually been very similar. Anytime Ethereum has implemented a change on their blockchain, Ethereum Classic about 6 to 12 months later will also implement the same change. But right now, the big change that's happening on Ethereum Classic is not adopting, which is the change to proof of stake, which is where instead of having mining that goes on, like in proof of work, which is what Bitcoin uses, they're going to go to proof of stake where users basically say, I'm going to validate on the network. And if I, incorrectly or maliciously act in any way, my stake of Ethereum will be slashed. Right. So what's happening now with Ethereum and Ethereum Classic is pretty interesting. On Ethereum, we've got the merge, which is loosely set for the end of September. And I'm happy to talk more about that, which will basically change Ethereum's consensus mechanism to proof of stake. However, Ethereum Classic is now going to be just the only proof of work blockchain, and they're going to be very different. There's a lot of miners, though, on Ethereum right now that are mining on the proof of work blockchain, and they have signaled that they are going to switch over to Ethereum Classic, which also uses GPU miners, which is the type of mining machine that Ethereum miners use.
So, Katie, when this merge expected to take place at the end of September, do you think this is a sell the news kind of event, or is this a new chapter, another catalyst for Ethereum?
A lot of people are saying it's a sell the news event for Ethereum, which it may be just slightly, but I mean, it's actually a huge new chapter for Ethereum. I think what a lot of people are missing, and there's been some great analysis done in the space on that, is that Ethereum is actually going to have quite a bit of downward price pressure on it. And new supply for Ethereum is going to dwindle quite a bit. Right now, what you have is anytime new Ethereum are mined by miners, those, they might get held, they might get sold out into the market. But once the merge occurs, not only are we going to have a big chunk of Ethereum locked up, staking and supporting the network, any fees that previously, transaction fees that were paid to miners previously are now going to go to stakers. And so people are actually expecting that yield on Ethereum could be anywhere from 7 to 12% annually for being a validator on the network, which is huge.
Right. Well, let's switch gears a bit and talk about some tokens here. What happened with Glimmer this week?
Sure. So on Monday, there was an exploit on something called the Nomad Bridge. So when we deal with other layer 1 blockchains, they don't actually connect or talk to each other. So there's another layer 1 blockchain called Moonbeam, which is part of the Polkadot interoperable ecosystem. And to connect the two, to connect Ethereum to Moonbeam, there was a bridge created called the Nomad Bridge. Bridges work in very differing ways, but one main kind of way that these bridges work is that you basically have pegged assets on each side of them, because you can't necessarily send assets over. So if I wanted to send $10 over from Ethereum to Moonbeam, I basically create a wrapped asset that gets sent to Moonbeam, and then my original $10 still stays on the Ethereum side. So unfortunately, what happened is this exploit that happened on Monday, about over $150 million worth of assets were drained because a hacker was able to drain the Ethereum side, essentially leaving the assets that were on the Moonbeam side of the bridge without any backing or without any pegged. It would be like if a bank issued a bunch of IOUs and somebody robbed the bank.
I guess it creates a little bit of confusion here because when you hear a blockchain, we keep hearing about, how secure everything is. And,
Yes.
Yes, it's a younger asset class and you have to work through all these mechanisms here, but how concerned are you about that? Because, the premise has been that this is, one of the more secure technologies that are out there.
Yeah, so I want to reiterate that blockchains, layer one blockchains themselves are very secure. If you look at Bitcoin, it's never been hacked. Ethereum, the actual blockchain of Ethereum, nobody's managed to hack money from it. It's usually the projects built on top of it. Bridges between blockchains have been the biggest single point of failure or vulnerability in the ecosystem the last year. We've actually seen several high-profile bridge exploits on Wormhole, which is the bridge that connects most Ethereum-based blockchains to Solana. There was the Ronin bridge hack, which is a layer 2 bridge for a gaming project called Axie Infinity. There's actually several others that I can't even think of off the top of my head. It's kind of become a running joke is that bridge security really needs a lot of improvement in this space in order for it to be reliable. So, I mean, I've seen kind of in my time within digital assets, there's always kind of usually the exploits happen in concentrated sets, and then what happens is that builders get smart and they start to patch the holes within these like specific exploits that keep happening again and again. So I'm sure we'll see a lot of improvements in bridging technology, but it's definitely something that's very complex and is going to take time.
Okay, Katie, we appreciate you making that distinction. Let's move on to sports and entertainment crypto projects. This particular item of news I'm excited about.
Awesome. So for those of you who don't know, there is a project called Chili's, and essentially they're a sports and entertainment focused digital assets product. They help sports teams issue what are called fan tokens, and fan tokens can be thought of like rewards that fans can buy to support their team. The fan tokens give them the ability to vote in polls for specific teams to get access to exclusive events. So Chili's has been the forerunner in this area. And this last week, or just on Monday, they announced that they are investing $100 million into Barca Studios, which is FC Barcelona's studio for digital content creation. They basically acquired about a 25% stake in the studio, and they're going to be driving their NFT and metaverse initiatives.
All right. And Katie, in the last minute here, let's wrap up and talk about a stablecoin project that you're following.
Sure. So AAVE, which is a lend borrow protocol, it's one of the biggest DeFi protocols across every chain. It's, I think, the third by total value locked. It has $6 billion in TVL at the moment. And AAVE has been around for many years, but yesterday they actually passed a proposal to add a stable token to their product. And this stable coin is going to be backed by a basket of other cryptocurrencies. We're really excited about this project because it should increase earnings to the AAVE DAO, which to date has fairly small earnings considering the amount of deposits and lend borrow activity that they see. For context, they're trading at about 250 times price to earnings.
All right. Appreciate the insight as always, Katie. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.